Hello, everyone. We've got an important financial update to share with you today. The Internal Revenue Service, or IRS, has recently issued a new notice called 2023-54. This might sound technical, but don't worry, we're here to break it down for you. To understand this rule, let's quickly explain several key terms. First, an IRA, or individual retirement account, is a type of savings account that offers tax benefits to help you save for retirement. Most of us should be aware of these pre-tax accounts. The distribution is subject to income tax, and therefore there are required distribution rules, commonly referred to as RMDs. Second, RMDs, or required minimum distributions, are the minimum amounts that a retirement plan account owner must withdraw annually. These rules have had constant regulatory changes since December of 2019, when the Secure Act 1.0 was passed. That bill passed in December of 19 and posed two major changes to these IRA accounts. The first change was the delay when the RMDs needed to start. The age to start increased from age 70.5 to age 72. The second major change impacted beneficiaries of these accounts when the account originator passes away. Beneficiaries in this law were divided into three identified categories. First is eligible designated beneficiaries, or loving our acronyms, EDBs. This category would include the surviving spouse of the account owner, minor children of the account owner, but not grandchildren or younger relatives, disabled individuals, chronically ill individuals, and individuals who are not more than 10 years younger than the account owner. It's important to note that spouses have special rules. They can assume the account as their own. When doing so, in that case, rather than being deemed a beneficiary, they then become the rightful owner of the IRA funds. EDBs, or eligible designated beneficiaries, have the ability to stretch distributions over their life expectancy or for a minor child until that minor child reaches the age of majority. The second category is non-eligible designated beneficiaries, or NEDBs. These are beneficiaries who do not meet the criteria to be an EDB. Most commonly, this is the adult child of the account holder. For these non-eligible designated beneficiaries, the entire inherited IRA must be distributed by the end of the 10th year following the year of the account owner's death. At least, that is the way most people interpreted the rule that was written when it was written. However, about 27 months later, in early 2022, the IRS issued a different interpretation. Their regulation altered the interpretation of the legislation that had been passed. The ruling indicated that for these non-eligible designated beneficiaries, if the deceased account owner was past the required beginning date, that being the date that RMDs must start for the account holder, then these NEDBs would need to take RMDs from the inherited IRA in years 1 through 9, based on the age of the person inheriting, and then empty the account balance in the 10th year. This regulation would have posed a problem for most folks that interpreted the legislation in the most common fashion. That being no RMDs required for these non-eligible designated beneficiaries, except the whole account needed to be emptied in year 10. The tax penalty alone for missing RMDs at the time was 50% of the RMD on top of the ordinary tax that would have been due. Thankfully, the CARES Act, which dealt with COVID, provided everyone a waiver of RMDs in the calendar year 2020. This act did not exempt RMDs for 2021 and later, and NEDBs would be needing to take an RMD starting now in 2021. But this new rule wasn't even published until February 24th of 2022, and most everyone would have missed the 2021 RMD. Surprisingly, I referenced our subscription on ChatGPT 4.0 for some research on this video. And even the most modern AI or artificial intelligence didn't discuss this year 1 through 9 RMDs. Unfortunately, I apparently have better sources on these topics than AI, and I'm quite confident about these year 1 through 9 RMDs, and I'm even providing the appropriate web links to substantiate this. Because almost all of the NEDBs missed the 2021 RMDs, and because of the extended issues with COVID, the IRS later then issued Notice 2022-53, providing relief for the missed 2021 and for 2022 RMDs, specifically for these non-eligible designated beneficiaries, or NEDBs, under certain circumstances. This did not provide relief for the traditional RMDs for the account holder. Keep in mind these year 1 through 9 RMD rules only apply when the deceased account owner was required to take distributions from the account because of their age at the time of death. The third beneficiary category is non-designated beneficiaries. These are entities such as estates, certain types of trust, and charities, typically non-living entities. These non-designated beneficiaries must distribute the entire inherited IRA within 5 years. So what's new? What changed? Now, according to this new IRS notice, there's some relief for people who missed taking out these required amounts, or RMDs, also for the year 2023. Notice 2023-54 provides yet another year of RMD relief for these NEDBs, or non-eligible designated beneficiaries. This relief is specifically for those certain beneficiaries of the IRA who are supposed to withdraw within a 10-year period. It will not apply to one's own RMDs or to beneficiary RMDs of eligible designated beneficiaries. The notice also addresses another issue. There's a rule that says if you take out money from your IRA, but then decided you didn't need it, you can roll it back into the account. But under the rules, the traditional rules, you have 60 days to roll that back in and avoid paying taxes on it. Now the IRS is extending that 60-day rollover deadline for people affected by a recent change in the law. The Secure Act Model 2.0 was passed in December of 2022. It extended the RMD age for IRA account owners from age 72 to age 73, and in a decade will further extend it again to age 75. So some folks weren't aware of the extension of age and inadvertently took an unwanted RMD in 2023. Well, those folks are granted relief, and they now have until September 30th of 2023 to put it back into their account, even if it's past the usual 60 days. A quick note on rollovers. You can only do one rollover per year. However, this new ruling won't count as your one rollover if you've already done one in the past year. But it will start a new 12-month period where you can't do a rollover again. Phew, that's quite a bit to digest, but we hope that simplifies instead of complicates the recent IRS notices rather, for you. As always, staying informed is the key to managing your financial future. And as always, feel free to reach out with any questions that we might be able to answer for you. I know that this was complicated matters dealing with IRAs. And so if you have any questions, feel free to call us at any time. Tune in next time for more updates as we get them. Thank you.